I think that we're entering what will be the greatest monetary crisis in world history. That's a radical statement. I know it sounds outrageous to say it, but I think that that's the case. And at this point, there's going to be a panic into gold because it's the only financial asset that's not simultaneously somebody else's liability. So, okay, with that introduction, yeah, I'm still bullish on gold, but for different reasons than in the past.
Doug Casey, author, investor, and founder of Doug Casey's International Man. It's a true pleasure to host you on Palisades Gold Radio today.
Thanks, Stijn. It's nice to be here. Although here, for me, is on the farm near Punta del Este, Uruguay, where I spent a good bit of time.
Excellent. I would love to get this discussion started talking gold for a second. Of course, we are in the midst of an incredible bull run. The metal is up over 50% year to date. Where does that leave us today? How should one look at or view gold in November 2025?
Well, for years, I've been saying that, of course, I've been a gold bull ever since I came to understand the economic reasoning for gold being money. So I've been in it for 50 years, and the honest truth is I've never sold an ounce, consistently bought it, always used it as a savings vehicle, occasionally as a speculative vehicle. But for some years, I've been saying that it's underpriced relative to other things. You've heard the old meme that historically an ounce of gold would get you the best suit of clothing, so forth. A meal is worth a quarter of an ounce of gold, all this type of thing. Well, that's no longer the case. Relative to other things in the world, gold is reasonably priced, perhaps even overpriced. So you can't view it the way that we have viewed it for the past. But we're in a different paradigm. I think that we're entering what will be the greatest monetary crisis in world history. That's a radical statement. I know it sounds outrageous to say it, but I think that that's the case. And at this point, there's going to be a panic into gold because it's the only financial asset that's not simultaneously somebody else's liability. That's very important in a world which has so much debt and governments are printing money hand over fist. So, okay, with that introduction, yeah, I'm still bullish on gold, but for different reasons than in the past.
I guess this ties into the idea of this being the last bull market. I recently had a chat with Matt, of course, who introduced me to that topic. What do you mean by that?
Well, I think the world is going to have to reorganize. This is a major turning point. I speak as a strictly amateur observer of history, but from many points of view, we're heading into a major turning point in world history. An important part of that is going to be reorganizing the economic and monetary way things are done. And you simply can't operate, I don't think, in a complex, high-tech world with arbitrary fiat currencies. So what are you going to use to trade among each other? Well, frankly, the oldest solution is, or one of the oldest, and I think the best solution is gold. So, look, I'm an anarchist. I don't believe in government as an institution. Let me say that to start with. Therefore, we don't need currencies issued by governments. We don't need central banks. But you do need a way to trade with each other, and that's gold. So, answer to the question, yeah, I think the world is going to go back to gold. Perhaps not quickly, certainly not immediately, but reality always wins out in the long run. I will add that I think Bitcoin, which is a unique mathematical concept, is also going to play a part in this. And I don't know exactly how the two of them will fit together because they both have advantages. But Yeah, I'll put my money on those two things as being prominent in the reorganization of the world's economy in the years to come.
Incredibly interesting. How could a monetary reset or a monetary crisis like you're describing now unfold itself?
Well, we often talk about an economic collapse or a financial collapse, but that doesn't necessarily mean that all the buildings in the world and the technology and the skills of people are going to collapse. It just means that the financial system collapses. So most of the real wealth in the world will still be here during the Greater Depression. I call it the Greater Depression because what we're looking at, because it's going to be much worse, much longer lasting, unfortunately, and much different from the unpleasantness of 1929 to 1946. But the real wealth in the world is not going to collapse. It's just going to change ownership. So since we live in the material world, you just want to orient yourself so that you're not hurt by this too badly. Everybody's going to be hurt by it. So, the definition of a depression, or I think the best one, is a period of time when most people's standard of living drops significantly. So yeah, a depression is no fun for anybody, quite frankly. But if you can insulate yourself from the worst elements of this depression, life will go on. You'll emerge the other side.
Today's episode of Palisades Gold Radio is proudly brought to you by our parent company, Palisades, Goldcorp, Canada's leading junior resource investment vehicle, trading on the Toronto Venture Exchange under ticker symbol PALI, with equity and warrant positions in over 200 companies, ownership of mineral projects and royalties, and a 15% stake in newfound gold. Palisades offers investors powerful, leveraged exposure to precious metals, uranium, copper, and other critical minerals. Palisades shareholders directly benefit from our team's extensive industry knowledge and access to deal flow, opportunities historically reserved for a small group of investors. To learn more, visit us at palisades.ca and join us in our mission to level the playing field for investors. Now, back to the show. Understood. You mentioned earlier that you believe Bitcoin might play a role in this. Is that Bitcoin specifically, or are we talking crypto, perhaps through, for example, a Tether who's now doing a stablecoin with gold?
Yeah, right. Well, look, I'm a technophile. I love technology and try to keep up with it. But having said that, I simultaneously and paradoxically hate my computer. These things take over your life. Bitcoin. I was introduced to it a long time ago by a Belgian friend who actually gave me a physical Bitcoin, which I still have, incidentally. At $12, I bought him a meal in Argentina. And he said, well, here, this is fair. Let me give you this. So you could say I've been in Bitcoin for how many years? What year was that anyway? 2014 or something? I don't know. And I bought more Bitcoin since then. But I didn't really get on the Bitcoin bandwagon until 2017. The reason is that as a bit of a classicist, I buy Aristotle's argument about what constitutes a good money. And most people don't understand what constitutes a good money, although the information's been out there for about 2,300 years, 2,400. Aristotle said, and I'm not trying to give you a lecture on economics, but I think this is important to lay a bit of background. A good money has to be durable. That's why we don't use wheat as money. It doesn't last forever. It has to be divisible. That's why we don't use artwork as money. You can't make change for the Mona Lisa. It has to be convenient. That's why we don't use lead as money. There's too much of it to be usable practically. It has to be consistent. That's why we don't use diamonds or real estate as money. And it has to have use value in and of itself. And this was the problem I had with Bitcoin. Bitcoin suits all those other four characteristics. But I said, what's the use value of Bitcoin? And it finally occurred to me that when I went to a Bitcoin conference in Aspen, where I used to live for many years, that it's as a transfer mechanism. It's actually instantaneous and private and more convenient. It's got a lot of advantages over gold in that way. And especially in the kind of world we are today, computerized, it serves a big useful purpose. And there is a sixth reason, I should say. Neither gold nor Bitcoin can be created out of thin air by the state. This was irrelevant to Aristotle. It was kind of a metaphysical impossibility in his days. But that's actually the sixth characteristic of good money. And both gold and Bitcoin fit them. I think they're both monies. As far as these altcoins, I don't know how many scores of thousands of them they are. Some of them undoubtedly serve useful purposes. Most of them are scams, frauds, like the Trump coin, for instance, which is ridiculous and egregious. But I don't play with them. A friend of mine manages some money for me in that area, but he thinks he knows what he's doing. He probably does, but I'm only interested in Bitcoin.
Understood. Shifting back to gold for a second, is there anything that could derail this thesis of that you have? For example, Judy Shelton is talking about a gold-backed bond. Is that something that can be used to potentially change the tide?
I've heard the name. Who's Judy Shelton exactly?
A very good question. I know that she was part of the Federal Reserve in her history. I'm not exactly sure in which role.
Oh, yeah. Okay. Federal Reserve, high government official, almost certainly unsound in her basic thinking. Look, I think that if the dollar is going to be saved, I suppose it can be, probably will be. Well, that's a prediction I'm not going to put too much money on. But look, we shouldn't have currencies to start with. Let me start with that. It started out that the dollar was just a name for 1/20th of an ounce of gold, and a franc and a mark and a lira. These were all just names for specific amounts of gold. And then people forgot. They thought that the currency was the real thing instead of just being a name for a specific amount of gold. So governments don't belong in the currency business, okay? And we don't need these currencies. You should be trading gold itself. And in the same category, I would put Bitcoin at this point, although it's still early days for Bitcoin, historically, obviously. So I don't know what Julie Shelton thinks or believes, or I don't really care. But if the U.S. government wants to maintain its currency, the dollar, yeah, it's going to have to back it by gold. And by back it by gold, I mean make each dollar redeemable with a specific amount of gold, as was the case before 1933, when the Roosevelt regime stole all the gold from the American people. Roosevelt, I've got to add this in, was among a number of other presidents, one of the great criminals of modern history. But in any event, yeah, they can do it. The question is, at what price can they do it? And they have to stop printing money, which I don't think they're able to do at this point either. What number do you want to take? Well, we can pick lots of numbers based on the number of dollars outstanding and where they are, $20,000, $25,000 or something like that. I think that they are going to officially raise the price of gold to something in that area, because these people believe that these people are financial engineers that are running the government now, and they think by arbitrarily raising the price of gold, they'll be adding a big asset to the U.S. government. And there's all kinds of things when you have an extra asset, even if it's kind of a phony baloney asset like dollars raising the price of gold. But yeah, I think that's going to happen. I think that's likely because these people are desperate.
Do you think there's any credence to the idea that we might have already seen an controlled re-rate of gold behind the scenes by these governments, allowing the gold price to rise?
Well, I don't believe an awful lot of what I see in the popular news, certainly not when it regards what governments are doing. But it appears, and it's reasonable, that many of the world's governments have been buying a lot of gold. Now, why are they doing that? Well, one reason they're doing that is they can tell that the dollar is a hot potato. They know it's being printed up by the bushel basket, by trillions per year. So they don't want to hold on to it. So what are they going to buy for their central banks? Other currencies? No, they're even worse than the dollar, most of them. So yeah, central banks have been buying gold for years. The Russians, the Chinese, the Indians, everybody, frankly, anybody that's got any sense, quite frankly. So that's going to continue as they dump dollars. And there's lots of reasons you want to dump dollars, not just because it's a depreciating asset, not just because they can steal them from you like they did from the Russians a few years ago, which is still amazes me. But you simply can't trust the U.S. government. And all dollar transactions basically clear through New York. Why would you want that to be the case when you're dealing with your adversary? So the dollar's in a lot of trouble because nobody trusts the U.S. government anymore, nor should they. So what are they going to do? They're going to trade with each other with gold. I mean, it seems perfectly logical to me. What's the flaw in that argument?
Is the dollar in trouble compared to other currencies, or only if you look at it in isolation?
Well, look, all of these currencies in the world are just fiat units. They're all run the way the US dollar is, with central banks and governments, which are most of them, for practical purposes, bankrupt. So I guess you want to own the best looking horse on the way to the glue factory. So, yeah. And the dollar is used, everybody owns them. It's kind of the international numeraire. But at the same time, it's an asset that everybody owns. And when the wrong kind of psychology overtakes the market, everybody's going to want to dump their dollars. But since everybody's got dollars or uses them to trade, who's going to buy them? It's going to be it's like when you call your broker and you want to sell a crappy stock, and the worst thing you can hear on the other end of the phone is an elephant fart. Do you know what that is?
Haven't heard that one before.
It's when you tell your broker sell, and he says, "To whom?" That could happen to the dollar at some point. And at that point, when that happens, there's no place for those dollars to go but back to the United States, where they'll be traded for titles to stock certificates, real estate, real goods, whatever. And when all those dollars are repatriated from abroad, where they're owned by foreigners and used abroad, to bid for goods in the U.S., inflation is going to explode in the U.S., and the situation will get worse. And then, of course, the U.S. government, since it always has to do something, will inevitably do something stupid. All kinds of stupid things they can do. Foreign exchange controls, wage and price controls, on and on. So I don't see any way out of this catastrophe. Why? Because this situation has been building and growing for many decades. And it's like when you jump off the top of a 100-story building. Everything's fine until about, the first floor.
Let's say that this thesis is completely correct and we're going to see a paradigm shift, towards hard assets, precious metals. That sounds like an opportunity through which a entrepreneurial investor could potentially make generational wealth. If you, for example, look at gold miners, how does one ensure they do not squander that opportunity?
Well, first of all, gold mining, I've been involved in that business for about 50 years, which is not a testimony to my intelligence, believe me, because it's one of the worst businesses in the world. It's a rotten business for lots of reasons that I can recount to you. But on the bright side, it's a very, very volatile business. These stocks are more volatile than biotech stocks or computer stocks or anything. And volatility can be your friend. It's most people's enemy, but it can be your friend, very good friend. So I'm actually playing gold mostly through mining stocks, not through gold itself. I continue to see gold as primarily a savings vehicle. So yeah, I think we're going to, since I started getting involved in these things in about 1970, we've had, I don't know, I used to keep track of this stuff closely, but now it's ancient history, about 5 major bull markets. And by major bull markets, I mean when the crappy little stocks all go 10 to 1 as a group, and some stocks go 100 to 1, and occasionally you get 1,000 to 1 shot, which has actually happened to me. Yeah, the mining stocks is where you should be right now because they're extraordinarily cheap relative to everything. I mean, they're still a crappy business, but not as crappy as it used to be because producers have all-in sustaining costs. I'm sure everybody's familiar with that definition of $1,500 an ounce, and gold is $4,000 an ounce. So producers are finally making really good money. It's finally like having a gold mine, which in the past has not been a good thing.
Well understood. And talking about the majors for a second, we hear often that these companies are still trading at very attractive price to cash flow or price to NAV, net asset value ratios, even though they have moved significantly already. Are you seeing this as well?
Yeah, they've just started to move. Look, I try to keep my finger on the pulse of people that play with money, hedge fund managers. Like I'm on a Zoom call every week with about typically 35 guys who are all big deal hedge fund managers. Not all, a few military experts and a few other guys like that. But this particular group is kind of friendly to gold, but I don't think anybody owns any serious gold stocks, even among them. Among the average fund manager, they've been taught to despise gold. It's very gold companies are anti-DIE and ESG, and they're raping Mother Earth, and everybody thinks they hate the environment. And so gold stocks are very underowned for political and psychological reasons. That's still the case, okay? As a percentage of market capitalization, mining stocks in general, but particularly gold stocks, even after their recent run 2-3 times up, something like that, are still at about the lowest level in history. This is also true of oil stocks, which I'm also very friendly towards. And the public is not involved in these things at all either. There's no bubble in crappy little penny mining stocks. When there is, you'll know it, but it's not now. And gold coins, you look at the premium of gold coins above the bullion price. It's been moving up a little bit, but it's still pretty close to all-time lows, pretty close. So no, the public's not involved in this. So even though the market's doubled, tripled, whatever, it's not even in the. It's just barely in the takeoff page. I feel pretty confident And of course, whenever I feel confident about something, I like to pinch myself and say, wait a minute, I must be wrong. But I think I'm right this time.
All right. Getting back to the question of how to ensure you do not squander this opportunity, how should one view at building a portfolio between bullion, producers, developers, and juniors?
Well, I mainly play with well, not so much the explorers, more with the developers and small producers, the big mining companies, which will be the first ones to move because as the institutions stick their foot in the water and the public does, they're the names everybody's heard and so forth. But I like the smaller companies because they're more volatile and because the management is more entrepreneurial. They're not stick in the mud suits, as I hate suits, especially in the mining business. Uh, I like I like management that are out in the dirt, playing in the mud, as opposed to in boardrooms, quite frankly. So that also leads me to the smaller companies who tend to be mechanical engineers as opposed to financial engineers. Although financial engineering is really big with these crappy little gold stocks, I can assure you.
Trying to channel my inner Charlie Munger, trying to invert this. What should one avoid in these junior mining companies?
I got to say a word about Charlie Munger and Warren Buffett, two incredibly smart and competent guys, but without a good understanding of basic monetary economics. I guess it was Munger that said owning gold is like owning a pet rock. Or I guess they both said that. Well, they're just dead wrong. That's all there is to it. Not to say they weren't geniuses in other areas, which definitely was the case while Buffett's still alive. Anyway, sorry I went off on that tangent. I couldn't resist. What did you ask me just then, Stijn?
What to avoid in his juniors?
Well, there are thousands, literally, of these junior mines out there. Thousands. 2,000 or more, I don't know. They come and go all the time, go bankrupt, merge. New ones grow up like poison mushrooms, which most of them are. So over the years, I've developed a mnemonic to analyze these stocks. I call them the 9Ps. Things that you should look at so that you don't get trapped in a promotion or all kinds of things that can go wrong. And the brief answer to your question, the 9Ps, it's a mnemonic, but I can't remember 9 things. Nobody can remember the 10 commandments even. So forget about the 9Ps. The first one is people. You find a company that has really good people. Well, how do you know they're good people? Well, because they've been successful consistently in the past. And better yet, you've gone out of your way to get to know them personally so you can size up their character. Good people make for a good business. Bad people can take a multi-million ounce deposit and bankrupt the company. So people's the number one thing. Then there's other things that are more technical. So to keep it simple, and since we live in a big world with lots of investment opportunities and you got lots of other things to do with your life besides look at crappy mining stocks, I guess the big thing is just try to get involved in companies with good people. Now, there are other things. Sometimes you can be paying too much for the good people, but we're not at that stage of the market yet. So that's kind of it in a nutshell.
Well understood. Thank you for taking us along there. I would love to talk about the gold bullion as part of our portfolio for a second. You've highlighted that you've used it in the past as a savings vehicle as well as a speculation vehicle. I presume with the second one, the goal is, of course, to really appreciate in wealth, not just maintain it. Do you think there's an opportunity to do so with gold bullion today?
Well, when you're buying gold bullion, it's typically in kilobars, 100-ounce bars, I don't think anybody buys 400-ounce bars except for governments, because that's the standard good delivery size, I believe. But if you want to own gold bullion, yeah, you can buy these, what the hell is it? Publicly traded, like, or you can store it. Look, the best way to own gold bullion is forget about the paper gold, which is what I've been just referring to. What you want to do is you want to own it offshore, outside of your own country, because your financial risks and economic risks in today's world are gigantic. But your biggest risk is political risks. That's primarily from your own government, which is not your friend, it's your enemy, it's your predator. So you want to, no matter what country you live in, you want to have a lot of your gold in a secure foreign country. And that's where you own your bullion. And here, kind of a commercial. I want to give you a couple other commercials because if you want to put the theory into practice, you got to know where and how. So the two things the one thing I really like is SWP in the Cayman Islands. You can Google them. It's secure, good jurisdiction, good people. And that's where you buy gold bullion and silver bullion.
Perfect transition into silver for a second. Is it a monetary metal as well? Should there be a similar thesis for gold as for silver?
Well, less and less. Copper used to be a monetary metal, actually. And of course, years ago, I think it was 1980, it was taken out of the penny. But in ancient days, it was used in day-to-day carnage. Answer to the question is copper has legitimately been demonetized. It's an industrial metal. Silver is interesting because, let's say, rough numbers, there's 100 million ounces of gold mined every year and about 1 billion ounces of silver mined every year. The gold isn't basically consumed, it's saved. Silver is basically used. It's a high-tech metal. Of all the metals, it's the most reflective, the most conductive. Those two things, reflective and conductive. And in a high-tech world, that's really important, those two things. So silver is not going away, but also it is a good secondary monetary metal. And relative to gold, it's very cheap. I mean, it's just recently touched its all-time previous high, which I guess it's done twice before, $50 an ounce, more or less. But that was when the dollar was worth 4 or 5 times what it is right now. So to go back to its old high in real terms, it's going to have to go to $200, $250 an ounce. And it's kind of the poor man's gold. I own a lot of silver, and I'll continue to do so, including those 1-ounce silver coins, which I think are neat. They're too expensive to give out as tips anymore, which at $4 silver, which wasn't so long ago, you could do. But people didn't appreciate that anyway. The average person's what you call an NPC. You're familiar with that term, I'm sure.
You mentioned... Oh, sorry, go ahead.
No, answer to the question, yeah, I'm very, very bullish on silver. But kind of because it's a poor man's gold. And, a lot of people just figure they can't afford gold, but, silver's kind of doable.
So it's kind of a play on, if we're going to see this acceleration in demand for precious metals, silver is the place that retail investor would go towards?
Kind of makes sense to me, because the market capitalization of silver, even though the production is 10 times more than gold, the inventories are vastly less. And exactly. It's a much smaller market, much tighter market. Public will drive it. Yeah, silver's going higher. Of course, a lot of this changes if we have a deflationary collapse along the way, which is entirely possible. The world is so indebted. If the debt is not inflated out of existence, it'll be defaulted on. And what does that mean? It means if $1 billion bond is not paid off. Where's the $1 billion go? Well, it disappears, it dies and goes to money heaven. And the money supply drops directly or indirectly. So there's a risk. There's always a risk. But no, I think they'll keep inflating because they don't want to see. The one thing they're afraid of is a deflationary collapse, which we might get.
Sounds very little more scary than that. You mentioned that silver is cheap compared to gold in nominal value, of course. Also, if you look to a gold to silver ratio, it's incredibly cheap. Is that still a fair way to look at silver?
Yeah, I think it's fair, but it's transient. In other words, for many decades, people thought, I thought idiotically, that there was a fixed ratio between gold and silver. What was it, 17, 18 to 1? But it makes no sense. It's like thinking there ought to be a fixed ratio between anything. I mean, sure, there are general ratios that make sense. Ratio between wheat and soybeans, or corn and cattle. I mean, yeah, these ratios are interesting indications. And the same is true of metals for lots of reasons. But with changes in technology, especially, the relative value of things change. So there is no magic ratio between almost anything in the world. So at 80 or 100 to 1, is that where it should be? I don't know, the word should only really means something in a moral context. And incidentally, that's one of the things people never talk about when it comes to money. This is a moral question, much more than a technical or economic question. It's a question of what's right and wrong. But we're not talking about that. People don't want to hear about that, and I understand that.
It's of course also significantly harder to
what I'm
make
saying
money
is,
from.
well, I guess what I'm saying is from a moral and an ethical basis, Western society has bankrupted itself. It's too bad. I'm really going to miss Western civilization. It's the best thing by an order of magnitude that's ever happened to the human race. But it's been screwed up by these silly monkeys, and I guess it's going to be washed away. Well, maybe it'll be a Western civilization renaissance sometime in the future. I'm a perpetual optimist.
Would you say it's only Western society? If you look at, for example, predictions of where China's government debt might be, seems to be incredibly high too.
Well, yeah. Listen, a lot of these governments, all governments are essentially criminal organizations. I know that shocks people and will discredit most of what I have to say, but I've got to say it because it happens to be true. Government is an institution of coercion and force, and those are not good things in the world. So I'm not a fan of any governments, but some are much better and others are much worse than others. So China, such a complex question. Yeah, I have high hopes for China, actually. One thing is that they've discarded communism. It's authoritarian, but it's not a communist country by any means anymore. So it's improper, even though they call it the Communist Party. It's not communist. It's just a scam for the people on top to stay on top at this point. But it's got nothing to do with communism or Marxist-Leninism. These people are way too smart to know that that's not all just bullshit. The only place people believe in communism and Marxist-Leninism is New York City and American universities, frankly. It's embarrassing. Yeah, I remain a bull on the Far East. It has not yet been corrupted by the things that have corrupted the West. So if I was going to make a bet, and I know Warren Buffett said never bet against America, except it ain't America anymore. That's one thing he forgot. It's no longer America. So note to Warren. I'll bet on the Orient, frankly, primarily.
Incredibly interesting. I would love to take you back to silver miners for a second. Is that a place where one can find potentially incredible leverage towards this paradigm shift that you're describing here?
Yeah, of course, there's not a lot of silver miners because well, I don't know what the percentage is. 70, 80%, I'm thinking, of all the silver in the world is mined as a byproduct of gold or lead or zinc mining or copper. So that there's not a lot of silver miners out there. There used to be a stock market in Spokane, Washington, the Coeur d'Alene district, which specialized in small silver miners. There were lots of silver mines there. And they all traded on this crappy little stock exchange, which has disappeared. Too bad, actually. Primarily for environmental reasons, as well as economic reasons, lots of reasons. But there's not a lot of ways you can play silver purely. I own a couple supposedly pure silver stocks, speculations. But
I suppose this byproduct nature that you're describing here could also strengthen that thesis for silver, very inelastic demand, meaning even if the silver price spikes, these mines cannot necessarily produce more because silver is a relatively small part of their production profile.
that's right. Price of silver could go to $200 an ounce, and the amount of silver that's mined probably wouldn't go up because silver's values are generally a de minimis part of copper, gold, lead, and zinc mines, where most of it comes from. So it's nice, but they're not going to increase production for a minor metal like that. And even then, to increase silver from pure silver mines, most of which are pretty small. I mean, look, there's lots of silver in the world. Like there's a hill of silver in Bolivia called Potosi, where most of the Inca silver came from. I don't think it's being mined at all anymore for political and environmental reasons. But yeah, this could happen. I mean, look, there's an infinite amount. I'm not worried about shortages of anything, quite frankly, from silver to strategic metals, so-called, to rare earth metals. I mean, the universe is a pretty big place, and it's just a question of technology and wealth to recover them all. So don't worry. Don't listen to any crap about shortages. It's just a matter of time and money to get them out. Like I said, I'm a perpetual optimist. Incidentally, before we go any further, I've been dying to say everybody should buy this book. This has nothing directly to do. Do you mind if I do this, Stan?
Go ahead.
Just for a moment. This book called The Preparation, which I wrote with my friend Max Smith and his son, Maxim, is much more important than any of the things we're talking about. I've written a number of books on the subjects we're talking about. They're all pretty good, to tell you the truth. But this book, The Preparation, which is available on Amazon, relates to what we were talking about earlier about Western civilization. And the problem is, a lot of the problem is in the educational system. Young men today are lost, totally lost. One of the reasons they're totally lost is they don't know what to do after they get out of high school. They idiotically go off to college, which I think is a gigantic mistake for all kinds of reasons. And what this book does, Preparation, is it guides young men in what they should do with those 4 most important years of their life, when most kids are idiotically going off to college to chase girls and drink. It's all great, but you can do that any place, and much more effectively, actually, outside of college, I found. So buy this book, and it'll give you the preparation that you need to properly, among other things, invest properly. It's one of the things that anyway, let me just suggest to all your listeners, take my word for it, buy the book. You'll really be happy. And give it to a young man or your grandson or son or whatever, and you'll be really happy you did. So I had to give you that commercial kind of indirectly relates to everything else we've been saying. Okay, enough of that.
No, definitely. Happy you brought it up. I was going to ask you in just a few minutes, but happy we discussed that now. You know, to get back to that investing topic, which of course, very interesting for the viewers watching. Do you subscribe to this idea of a wider commodity supercycle that might line up with this thesis that you have for gold and silver?
Yeah, I do. One reason is that commodities, cyclically, people go for different things, kind of manias are developed. And now we're in a financial mania. And people don't think in terms of production of real material, stuff that comes out of the earth. All the commodities are quite cheap right now. The grains, basic food, they're all selling at or below production costs. Most of these metals, that's changing a little bit, but here's what I'm trying to say. People are putting their attention on the financial world right now, buying and selling stocks and bonds and options and things of that nature. It's a moving paper fantasy, and things are going to change. I think that as the world economy gets smacked upside the back of the head, they're going to change their orientation from basically fictitious financial instruments that are cranked out by the ton from investment banks and Wall Street and other places to more real things. So, yeah, I think the world is going to reorient itself in that way. I've always been a commodity speculator. It's hard to be a commodity investor, but a commodity speculator. And I think now is one of the good times to be in the business. Although speculating in commodities on margin is usually a bad idea for almost everybody, except for very skilled full-time professionals.
What do you think some commodities are that might be currently heavily overlooked, but might be, ready for a rebound?
Well, the biggies, the important ones, are the energy commodities, I think. Coal is a fantastic source of hydrocarbons. I mean, they're just simple elements: it's carbon and hydrogen, and some oxygen. But there's massive amounts of coal that can be converted into all kinds of good things, and it's very cheap now. Everybody hates coal. If people hate mining, they especially hate coal mining because it's dirty, and people die in coal mines, and you burn it, and it pollutes the air. Blah blah blah. That doesn't mean it's not valuable and necessary. So I like coal stocks. Some of them yield 10 to 15% in current dividends, which is because nobody wants to own them. That's why. So high dividend yields, unless the company's about to go bankrupt, are kind of like an outward sign of inward grace, some would say. Oil stocks, tremendous bargains right now. Tremendous bargains. It used to be, some years ago when there was an oil bubble in the world, a long time ago, people don't even remember those days. They were like 25% of the S&P. Now they're like 2 or 3%. But oil is the world's most critical commodity. So yeah, I'm big on oil stocks, and more than oil stocks. Best yet, maybe natural gas stocks. There's lots and lots of gas in the world. But there's problems with natural gas, lots of advantages, but also problems with natural gas as a fuel. So I like natural gas stocks, especially the small ones, especially in Canada. But you can get yields of 5-6%. And that, relative to oil, the energy content per dollar of natural gas is something like 4 or 5 to 1. So it's a real bargain. along with its other advantages. So I'm big on those. And last but not least is uranium, which I've said for years, nuclear is by far the safest, the cheapest, and the cleanest form of mass power generation. And you can forget about wind and solar. They're nice for isolated, unique applications here and there in the other place, but not for mass power for an industrial society. It's actually insane, maybe even criminally insane. So forget about those. So the energy minerals is the other place that you especially want to be. And I think the grains are cheap enough now. You can buy, talking about mining again, you can buy stuff that mines fertilizer, stuff like Mosaic Corporation, stuff like that. So because they're cheap, and when prices go up, farmers will want to grow more. They'll put more fertilizer on it. The usual story.
That's definitely a very, very interesting list in the energy segment. Talking about energy for a bit longer, what about the drillers? Is that an area that you're willing and interested to look at?
Well, you can't kiss all the girls, okay? And, yeah, I am interested in the drillers because they're cheap too. Yep, got to throw them in there, right? Because you can't produce more oil and gas or, yep, absolutely. But, who's got enough money to buy all these different things? You kind of specialize a little bit, favor some things more than others. Yeah, I like them. I mean, for that matter, shipping stocks, like for years I've owned an ETF, and I generally despise ETFs for all kinds of reasons. But sometimes they make your life easier. They're not forever holdings. They're too expensive to hold forever. But like BOAT, B-O-A-T, owns a bunch of shipping stocks and stuff of that nature. Has a big dividend yield. And so I do other things in the market, but you're not going to likely find me buying consumer durables or something like that, because I don't want to incur the brain damage to find out that much about those businesses. So I kind of stick to stuff that I know a little bit about. Not too much, because regardless, you just can't know enough about anything to really be sure. But you try to specialize to some degree, or you should, while remaining a generalist, which is what that book, the preparation, is all about. You cannot be a good specialist without first being a generalist, I think.
Regarding recessionary risk in energy stocks, whether that's an overblown risk or something to take into account.
And that leads me away from Europe, back to the Orient. Most of the world's people are in the Orient, and they're growing quickly and using more hydrocarbons. So the action is there and the consumption is there. And just because the West consumes still most of the hydrocarbons, that's changing. So no, I'm not worried about demographics or the economy reversing the upward flow of prices in hydrocarbons. No, I'm look, you have a depression, a credit collapse, prices of everything goes down because the money supply drops and all this. Yeah, for sure. But no, I remain bullish because hydrocarbons, oil, gas, uranium, just the higher carbon, of course, are still very, very cheap.
So, Casey, it's been an incredibly interesting conversation, picking your brain. Is there anywhere else you would like to direct the viewers that are still with us?
Well, I have a blog at internationalman.com, which is a very good free blog. It has an excellent article every day from lots of top people. It's really good, and it's free. So everybody should subscribe to internationalman.com. And also, we do have a paid newsletter called Crisis Investing, which is my original newsletter that we've started up again. You can find out about that there. And also, I do a podcast with my friend Matt Smith called Doug Casey's Take on YouTube. So those are the three areas that people can find out more. Of course, this book, The Preparation, but also I find that you can say a lot of things in the form of fiction that you perhaps best not say in the form of nonfiction. So I've written 3 novels with my friend John Hunt, and they're available on Amazon. They're called Speculator, Drug Lord, and Assassin. And maybe I'll write the other 4, which will be more radical than those. We're trying to reform the unjustly besmirched occupations of those highly politically incorrect occupations. So those are, if people like the rap that I've laid down, they can find out more with those things I've just mentioned.
Doug, thank you so incredibly much for your time and your insights today. I really appreciate it.
Okay, Stijn, it was a pleasure.
This podcast is for general information purposes only and does not constitute investment advice, an offer, or solicitation to buy or sell any securities. The views expressed are those of the host and guest and do not necessarily reflect the views of the company or their affiliates. Guests on the show are not compensated for their appearance. Certain discussions may include forward-looking statements subject to known and unknown risks and uncertainties that could cause actual results to differ materially. Listeners should do their own research, consult a licensed financial advisor, and not base any investment decisions solely on the information discussed. For a full disclaimer, please visit our website, and for full disclosure and risk factors of any companies referenced, please see full available disclosure and risk factors on their CEDAR Plus at www.cedarplus.ca.